what I'm going to do is speak for a little while. I'm going to use a series of slides. I think they're very simple slides, but I'm going to explain those. I'm going to talk about a Brisbane outlook. I'm going to talk about the short term for some time, and I'm going to talk about the longer term, particularly after this current movement in the market. You could even say irrational exuberance in the market starts to calm down. But we have some time before I believe this market does calm down. It could be the end of a pretty long run in decent price growth. Brisbane's catching up on some of it missed, but it can't last forever across Australia. When this slowdown occurs, I don't think it's going to be dramatic neither. I think that it'll plateau to a new height, but we've still got price growth left. And then I'm going to talk, in the second part of this, I'm going to talk about Brickworks Park. It's a project that I've been involved in terms of advice and also in terms of promotion. I only promote a project when I think it's a good one, and my team have actually worked on it and provided some advice. Changes are still happening on that project in future for the current stages that are about to be released, which is very, very encouraging. The developer and Position Properties are keen to actually provide the stock that's an improvement even on what was going to happen from a couple of months ago. So the next stages actually feature some pretty unique larger 2- and 3-bedroom apartments. And whilst I'm not going to talk about that per se, I'm going to outline why I actually think that Brickworks Park, if you're looking to buy as an investment or as an owner-resident, it is one of those projects that is somewhat rare in Brisbane. And why I think it's worth a closer look. I'm not going to tell you you're going to make heaps of money. I'm not going to tell you all your dreams are going to come true. I'm not going to tell you that you should have bought 4 of them because they're the best thing ever. But it's pretty good. So I'm going to talk about some of that. And then at the end of that, we'll have some questions and queries, okay? And I'll take any question you like. For the ladies, I am happily married and that's the way it stays. But you can ask me if I want to have a drink with you afterwards. Okay? You happy with that? Oh, look, there's no laughing. Let's relax a little bit. It's not that serious. I'm now going to show this chart a couple of times. And this just basically is a very good forward indicator of where prices are going to go or likely to go in the next 6 to 12 months. It's something that I've been tracking for over 30 years. A couple of the better urban economists and people in my space track this, and it actually outlines with some logic where prices are likely to go. This is just an interplay between annual change in house prices or dwelling prices. It doesn't just mean houses per se, on the vertical scale, and then the change over a moving period over housing finance. So in other words, when housing finance is starting to grow by a substantial amount, 50-odd%, you're likely to see in some future, usually 6 months advanced, 6 months later, you're likely to see a substantial change in house prices. There's so much evidence on that chart, and whilst that's only a quarterly figure for about 10 years, I've tracked this back to 50 years when the finance figures were actually starting to be reported with some consistency. So there's so much evidence here to actually be able to derive a pretty good statistical, not accident, but actually something that is a causation rather than a correlation. So if we were to look at 2 of those, in December quarter last year, the housing finance grew by about 7 or 8%, and that lifted annual house prices or dwelling prices across Australia, this is an Australian chart, by about 2.5%. In March, the amount of finance being lent as growth figure across the Australian market increased close to about 25 to 30%, and house prices annualised changed to about 10%. Okay. In the June quarter coming up, the June quarter would suggest that the price growth on an annualised basis is going to be something like 14 to 15%. So even in that period on an annualised basis, we're going to see increasing prices. And the big winner, at least in the short to medium term, and I don't know what it'll be yet till the next quarter of housing finance figures come out, but would suggest that across Australia, prices are going to rise by 25% per annum. So if you look where the prices are recorded now, to September, so March to September, 2 months of that's already happened. It's likely we're going to see something like another 10 to 15% increase in price. People ask me, when's it going to slow down? When's it going to stop? This price growth is already in the bank. Now, it might not be 25 or 26%, it might be 22 or 23. It's very unlikely to be not something in that range. So if you're umming and ahhing to look at buy something and you'll sound something you like, I'm not saying your property is going to increase, but the momentum of the tide is such that it should lift most ships. Okay, it can't continue to do that forever. Okay, it has to slow down, but at the moment and for the rest of this year, it looks like we're going to see a continuation of price growth. Normally I have to bring bad news, okay? So it's good news, unless you actually haven't bought and you can't buy and something, but if you've bought or you're looking to buy, you've still got a run in markets. This is the same information but shown on a normal graph basis. So here we actually have house prices over time, and then we have the change in housing finance brought forward by 6 months. So it's a very good lead indicator. There's some indication that it pushes prices upwards, and this is the price growth that I'm talking about. That has not happened in Australia since 1988. Okay? So it's likely that whether or not this growth can continue, I suspect this is going to back off in terms of housing finance, and this will start to flatten out. Okay? And maybe decline in terms of price growth, not price. So that's a good thing. Now the market is looking for a home. Okay, the money is looking for a home. Markets particularly are looking at locations, and one of the things that Brisbane has going for it relative to Sydney and Melbourne and other locations is its affordability. And I like to measure affordability not in terms of price against each other, but about the median price here or in a location in Australia and the median household income in that same location. And when the ratio is somewhere that's below 6 or 7, it's pretty affordable. And Brisbane is actually that. In fact, Brisbane is affordable versus the local income in most locations except for Darwin, which is, you know, a small market, and a lot of people don't just go to Darwin because of that, or Perth, and Perth's a long way away as well and likes to have a big border around it these days. It's cheaper than Hobart, it's cheaper than Canberra, it's about on par with Adelaide. So it's one of the reasons why people are investing here, and a lot of people are saying, well, I can buy in Brisbane and it's quite affordable. We think we're going to move there post-COVID or as a result of COVID as well, and that is one of the reasons. So that's another good thing. The housing affordability here is quite good. One of the winners in this internal migration in the COVID period is the fact that more people are moving to Queensland. And you can see that it's already had in 2019 calendar year, there was a 22,000 increase. It's now to about 32, and I suspect that will increase further. The big loser's been Victoria. Now, I don't think that that's going to continue running forever. Victoria wasn't nominated to be the best place to live in the world, at survey after survey, and then completely fall apart. But for a period of time, people are actually going to say, we don't like what's happened, we are considering our options, and we're going to see migration largely come to Queensland. The other thing as well that hasn't drawn a lot of commentary is that a lot of the growth, particularly in southeast Queensland and population growth, only a small percentage it actually comes from overseas. A large proportion of it is from interstate or natural increase. So on average, across southeast Queensland, only 30% of the population growth comes from overseas. That's a lot different in Sydney and Melbourne. It's closer to 50% in Sydney and it's closer to 60% in Melbourne. And when you look at places like Sunshine Coast, it's only 20% of the growth. Gold Coast is about 40%. Brisbane itself is about 40%. So when this market is driven away, it hasn't fallen as much, and in fact the migration from other states has backfilled a lot of it. And for that reason, one of the things that is quite poorly understood in Brisbane, although it runs off the tongue still by many commentators, and particularly from interstate, is there's way too many buildings in Brisbane. There's an oversupply of stock. There's too many apartments. That has not been the case for a couple of years, and because the supply is slowed down, higher building costs, particularly in apartments in recent years, but the population growth and underlying demand has been quite strong, and particularly of a market that is downsizing, which appeals to Brickworks Park in particular, you're seeing an undersupply overall of dwellings. It was oversupplied some in a recent past, but it's now undersupplied. Okay? So this market at the moment, even with the COVID impact, is not supplying enough stock to cater for the underlying demand. It's also very undersupplied in terms of resale stock on the market. There is, and that's one of the reasons that's pushing the price as well. Not only a lot of people seeking finance and gaining finance for the housing market and placing that finance somewhere, it's also the fact that the demand sales, in this case, is rising, and the amount of stock for sale, particularly in the Brisbane City Council context, is falling. I think it's fallen something like 30% compared to last year, and the sales have lifted by about 40%. So when you see a sign go up for sale, and it says sold on it within a week, that is why. There's not a lot of choice in the market, and sometimes that interferes with a sale, but often if there's momentum in price, people say, I'm going to buy that, we're going to miss out, and so forth, and that's definitely happening. If I was then to summarise this current short-term market in terms of its outlook, we're actually in a recovery phase of the market. There's certain phases in the property cycle. There's a recovery, an upswing, a downturn, and stagnation. Make it very simple because it's an evening and we didn't perform very well last night. So, some of us are a bit annoyed. So we'll cut through that and say recovery is spring, upswing is summer, downturn is autumn, and stagnation is winter. So what normally happens is a market goes through recovery, takes about 18 months or so, goes to an upswing, takes 6 to 12 months, then peaks and starts to calm down. I think it's going to accelerate a little faster than that, but for the next 6 to 12 months, we're going to see improving conditions generally in sales. And whilst there will be maybe less price growth in the back half of this year and into early 2021, I don't think that price growth is going to stop. It's just going to be less than the current momentum. So I think you're going to see between now and say March next year, somewhere in the Brisbane vicinity of at least 15 to 20% growth for a generic property, which if you asked me that 2 years ago, I would have said, no, that's impossible. But COVID's reset things. We've had a very loosening of finance. Money is relatively cheap. We've got a policy settings that are loose. We've got a fair bit of money washing through the economy in terms of handouts and grants and so forth. Those people who actually are in the professional space have largely been making money, and that's washing through the market, and we've got interstate migration. Again, it's not going to be a long-term thing, but it's there now. So it's pushing price, and for many, you'd be silly to miss it. This is a chart that I haven't regurgitated myself, but I've looked into this. I've looked at the data. I actually have it on a spreadsheet, but I haven't got it into graph form yet. This actually shows real house prices since 1990. Banking records started about here in earnest, and this goes up to just short of a couple of years ago, and it shows what I think is a very good picture and an accurate picture of what happens in Australia. What we see is prices surge for a range of reasons. As I've outlined, we're going through a surge at the moment, and then once that happens, we actually get a plateauing of price. And that plateauing generally can happen for a decade, sometimes longer. And that's because the price is too high, the settings are tougher, and so forth. And I suspect what's going to happen after this run, we're not going to see a collapse in price in Australia. We're likely to see a stagnation at that level, and it'll run for a period of time until housing becomes more affordable. We reset a range of things such as interest rates and so on. And then it'll run again. But it might take some time, usually a decade or so, before that happens. So my outlook beyond this current run on the market is that it's going to plateau rather than collapse. Now, if the market gets really silly and it grows, 30, 40% or something like that, and the Reserve Bank has to really slam on interest rates and the government has to tighten things for macro-prudential controls, we're going to see a fall in price, but I don't think that's the outlook. I actually think that we're going to start tapping the brake sometime next year to slow it down a bit. But until that happens, and really until we see a federal election, which I don't think any of that type of stuff will happen this side of a federal election, we're going to see the settings such that it sees price growth occur. Happy with that? Disagree? Okay, well, we can talk in questions while we disagree. But okay, so there's nodding there. Nobody's fallen asleep. Nobody's walked out. Okay, mission number one. Now I want to talk about Brickworks Park, great project, but before I do that, I want to talk about a few things that drives housing values beyond the macro. So I gave you a macro position, Australia-wide, you know, it doesn't apply everywhere and so forth. So I want to zero down now onto some things that I think are important when you say, okay, Michael, what drives? If you said this is Brisbane, what drives the market? What drives value growth in that process? The first is size. Okay, so you want to be where most people work, live, and play. So yes, you can go to a new outlying area, and there's nothing wrong with that. But a lot of the things where what matters, where the hospitals are, where the schools are, where people actually recreate, where they really want to, where their car naturally goes for pleasure and for work, that matters. Okay, and that leads to the second as well. A lot of people say to me, I think I should invest in a regional town, and I'd say, well, you know, they might have some growth, but it might be a high percentage, but it's not the real numbers. The numbers matter. So you want to buy in a place where there's actually a volume of sales, and you can resell in that market and probably get more than what you've paid for it. You need to buy generally a unique product, something that is either in the project or location. You don't generally want to buy house number 56 in a project of 250 of them, and house 56, if you had a few beers, you would not be able to find. Or you could find it, you could guess it because the GPS says that's where I live, but if you walked up and down, you'd go, they all look the same. You want to buy something that is unique, and that's one of the things that Brickworks is for a range of reasons, which I'll get to in a second. You want to buy an area that has some character and diversity. That's not only housing diversity, but trees, mature area, a view, something different. Well, even in this project, the spire is something that's unique, and it adds to the local character and the story of that. I have a simple rule of a 20-minute infrastructure rule. There's a range of things that you ideally should be able to get to in 20 minutes. That includes the school, it includes the shops, it includes some form of major transport, some form of open space, recreation thing, and something you do regularly. So if you run regularly, you're not far from that circuit that you run to. If you like to go to the coffee shops or whatever, the cafes, they're not that far away. If you need to get to town and you catch a train, you don't want that to be, you know, a fair distance away. It's better if that's what your centre is, you're close to that. Gentrification is something that's quite good. People have made most money in property, particularly buying in new projects, if they buy early and they buy in an area which is going to gentrify. It might not be proof on the ground. In this case, there's not thousands of apartments lying all around it. And if you said to an overseas buyer, oh, well, this is in Alderley and I actually think that it's not a bad project, they're not interested because it's not in Toowong or it's not in St Lucia or it's not in West End. They understand those markets. But a local will see that there's going to be changes there. You can already see it with the housing being approved. You can see it in terms of some of the beautification things that are happening. Some of the retail space has become quite funky, not far from it. And you're seeing projects like this starting to happen. And if I go and look at it from a professional point of view, if I go to say BCI, which is a register of all approvals in that area, I can see that there's been a ramping up of applications in that market over the recent years. Not all of them will happen, but that's a reflection that there is gentrification happening. So change is good, and buying early in that cycle often pays. And of course, the last thing that's quite important is when demand exceeds supply, which it is generally overall, and it is in this market. They don't sell 80 odd things in this project in the first couple of stages unless there was not so much a proven demand, but a latent pent-up demand for this type of stock. Okay? And that's what's happened. And some of the changes in the future, in the next stages, are catering for where that demand is saying, we'd like to see some bigger apartments and we're interested in 3s and larger 2s. That's a reflection of this latent pent-up demand. So let me talk a few things about Brickworks, what I like about it and what I don't see in other projects, particularly in a middle ring suburb in Brisbane. There isn't a lot of dwellings, okay? Really, for the number of dwellings in that project, it's quite small. The buildings are all small. So you'll know your neighbour if you wanted to. Their building envelopes are small, their number of apartments is high, a lot of them are single loaded. They have a good lift to unit ratio. You don't have to wait for hours for the lift, basically, or for a long time. They're limited in height and number per floor. Again, I mentioned single loaded apartments. I'll get to why that's important in the design of one apartment as an example. There is lots of secure and on-site parking for residents and guests, okay? It's got a very good curved linear streetscape, so it doesn't, when you get into that space, it looks like it'll be delivered in quite a good way, well treed, and it feels more like a suburban type of thing rather than a very urban thing. And there's parking in that facility. There's extensive landscaping, and it actually has some very large open space provisions and is one of the highest provisions of open space per apartment that's private to the residents than any other project I've seen in Brisbane. It's got more of a Melbourne feel in terms of the development process and its amassing of dwellings than we normally see in Brisbane. Many other developers here would try and rack a lot more apartments in here or townhouses and not give away the amount of open space. Okay, so that's something that's rare and hard to get. Let's just talk about an apartment design. I think this was in one of the first stages, and whilst we involved in some slight changes to this when we first got the original plans, this is a very good and not often seen apartment design which works quite well. This is really targeting a small couple for an owner-resident, or you can get 2 tenants if you were to buy that as investment. That's an important thing moving forward. If you want to get a 6+% return, you're going to have to get 2 tenants in a good location where people actually can secure a longer lease, which is your management, but also that they'll want to stay in and pay you an increasing rent to stay in there. And that can be achieved because the bedrooms, this is the entry, the bedrooms are actually largely of equal weight, not 100%, but large of equal weight. They're both en-suited. This is quite a good thing. This is a slightly larger bedroom. Remember, it's targeting also an owner-resident, but I can get 2 tenants in there, and this person might pay $50 a week more than this one, or maybe 75, but there won't be like a really lesser tenant in terms of the location. It's cross ventilation. So this is open, and breeze can come through here. Very rare for an apartment. I don't know why. It should be done a lot more because it suits the Brisbane climate. It will be air conditioned, but I suspect half the time these people can have this entry closed in terms of a gate and breeze through. They can keep this open, they can open that up, and it'll actually be quite cool in summer. This is actually, this part and treatment, which the initial conversations I had with the developer, they were actually somewhat negative about that and were umming and ahhing about its inclusion and should it be inside or not. That's basically a space. It's called, well, we'll call it a wet room. That's the laundry area. It's locked up and that's secure, but that's a great space that's lacking from many apartments. Most apartments lack an arrival space where you can put shoes and you can put bikes and so on, and you can put your laundry and hang it out and largely natural dry, okay? So that is something that I think is a big plus. There's a kitchen, which is the usual thing, but it's got bench space. It's a somewhat large kitchen. It will enjoy a view, and you've got a living and dining room that's quite spacious, and you've got a balcony that I can fit 6 people on it, maybe 8, and do that comfortably. Right? So those type of dimensions, which you say, oh, Michael, that's no big deal. Many apartments don't do this. They have too much corridor. They don't have the cross ventilation. There's usually one bedroom that they try and do something too fancy with this, and they compromise this one. The kitchen sometimes is smaller than it needs to be, and this often suffers. A balcony in Brisbane is an important thing. So that type of design is something that is well executed, and that is kind of like the minimal design execution in this project. So when I saw things like that, I was quite excited about the project and its appeal to not only renters, but also downsizing owner residents, which has been proof in the pudding. Let me have a few summary notes and then we'll take some questions. So I think that we're going to see a continuation of dwelling values increase over the next 12 to 24 months. I'm normally a glasses half empty type person, and a few people have asked me, like, are you on happy pills now that you've moved to Tasmania? And I say, I've always been on happy pills, it doesn't seem to work. So when I say there's going to be some price growth, I don't say it lightly, okay? I've done a fair bit of work and analysis to actually say that I think that's going to happen, and I think with some proof. Brisbane for this cycle is positioned to enjoy the ride. It has missed out on some of those before. One of the reasons why is because it had too much stock on the market relevant to demand. That is not the case. I think that we're going to see the market plateau after this current upturn and peak rather than crash. There is a range of things that do add additional value, and particularly the product uniqueness which this project has. The local area has lots of character. There's infrastructure down the road and also improving. Gentrification is definitely on the radar to happen in this belt of inner north to middle north Brisbane. You can see it happening all around it, and this is a pocket that's kind of been missed. And I think that will fill in due course. And when demand exceeds supply, that also leads to price growth. And in this area, in coming years, I think you're going to see the demand grow rather than just drop away after this project. I think this is worth a closer look, this project, because the building parameters and facilities are very good. It's rare to get that type of mix. The apartment designs and the fixtures and fittings and finish are very high spec. They spend a fair bit of time to lift that to a next level. Some could argue that the price per square metre is more than some of the things selling 2 or 3 kilometres down the road. Yes, it is, okay? But you're not comparing like with like. This is a better project. This is actually spec better, has more offerings. I would suspect would resell better and be more tightly held and would rent better. The open space parking and landscaping / amenity in this project is very high. In fact, I struggle outside of a high-rise building with a rooftop type approach to see where that amenity is done in a medium density in a middle ring project in Brisbane. And it has a very large owner-resident buy and focus, so much so that the current next 2 stages have actually been changed so that it appeals for that owner-resident market rather than what normally happens in an apartment project, which is 70% are sold to investors. They're sold quickly to people further away, and the project overall, nothing wrong with renters, but that volume of renters is usually too high, particularly for a middle location. This will have, I suspect, 70 to 80% owner residents and a smaller proportion of renters. And I suspect when an investor comes to resell their property, it'll be bought by somebody who's missed out or didn't believe in the project, who are going to be owner residents later on. Thank you very much for coming.
It's a bit hard to follow after Michael, but thanks, Michael, for your insights. I'm Richard Lawrence from Position Property. We've been project marketing in Brisbane for over 21 years, and we're very excited about this project, Brickworks Park. To us, Brickworks Park is 7 years in the making. We've worked with this developer for over 7 years on this site. And what we've been so excited about it is the scale of the site and its location. I think with changing markets and where things go, I think the inner city market for us is the key, and it's all about location. This location, 5 kilometres from the city, when you're looking at a site which is over 4.5 hectares, it just can't be repeated. That's what we like about this site. Sites come and go every day, but we've been persevering with this developer for over 7 years based on the size of the site, but its location. And a lot of the locations based around transport, infrastructure, but really it's about its neighbourhood. The neighbourhood's the key for this site, because as Michael has explained, what's happened in the neighbourhood is we've had a lot of houses get renovated, increased in pricing, and the growth of the housing market in this area has been strong, but very little supply of and future supply of new townhouses and apartments in this precinct. Just having a look from the front, we've probably the other key element is we've kept some heritage. So with the site, we always like something that is long-lasting, part of a little bit of design feature that we can then blend into the designs of the building. So we've got the chimney, which is a historical part which will remain, but also then we've drawn on the architecture. So the architect, Jeff Brown from Rothy Lomans, really focused on bringing that architecture of the bricks back into the building designs. And as we said, there's some townhouses at the front and also some apartments, but the scale of the site is very small in height. Key features, I think Michael's touched on as well, is the amenity, but what we like about the amenity here, it's broken up into so many different zones. So the architect and the landscaper, 360 landscapers, their focus was everything you could do in your home, you can do at Brickworks Park. So obviously you've got the pools and the barbecues and the gyms, but outside of this amenity that we've got only a footprint of 40% of building on the site. So we've got so much green space, we've got little pocket parks, we've got a small dog park, we've got a place for yoga, community gardens, everything that you can do in your backyard, you can do in Brickworks Park. And that's been the reason why we've had such great success with owner-occupiers. We've got over 80% of the sales that we've made to date have been from owner-occupiers, and predominantly people who live in the neighbourhood or surrounding suburbs already. One, they love the suburb, they love the location, but they see this opportunity that they can move into the area, into Brickworks Park, that they feel part of a neighbourhood. Just touching on the design, I mean, Michael sort of touched on it. We are launching another stage. This is one of the buildings that we're currently marketing, but just looking at the design elements of the bricks and the curves, we are continuing to focus on the same intent in the second stage. One of the questions was raised about working from home, and with the flow-through design and we've got this new design where we will have a 3-bedroom plus a separate study, but with that study design, we have got direct access from the back courtyard, from the rear courtyard, giving it direct access so you don't have to walk through into the apartment to get to the study or the office area. So we have focused on where we believe the market is going. We have really looked at our buyer demographic today, but also we've had a lot of people approach us to buy in the future stage, and they've really given us the feedback. And from a marketing agency and a development side, CDL, they look at the feedback that we've had from this stage and they've incorporated it in the second stage. So we listen to the market, we listen to where the market's going, and the feedback we've had to date on this first stage has been brilliant, but the second stage will also give us a different range of product. Just a cross section, looking from the front courtyard to the rear courtyard. Again, what we've tried to do and the elements that we've really tried to take in is today's lifestyle. People want natural light. Living in Queensland, people want the ability to get natural light, natural airflow. And that's really one of the key elements of this site, is we're sitting in a very private enclave in Orderly. All the apartments are very private, but we've got this cross flow, this natural light going through, which makes the livability and also the cost of living in it a lot less from running the air conditioning and all your lights. So we'll see them in high demand, obviously for owner-occupiers and tenants for a number of those reasons. This is probably one of the main elements I like is bringing that architecture and that feeling of the bricks back inside, and looking at the design and have something which has got a point of difference. Today's market is very hard to cut through in the apartment market and the townhouse market, but we've really created homes here and residents that people can enjoy that architecture and living in a community that has got a different feeling about it, and making it feel like home. The site itself, we just took this drone a week ago. We've started construction on the site, so the success we've had in the last 4 months has driven the site to construction. So the first couple of buildings have been demolished. They're actually bringing up the concrete as we speak. The guys on site are really happy about the noise and things every day, but it's progress, and progress happens pretty quickly with the experienced developer. That, you know, we've got the demolition that's probably taken 6 weeks. We're going to start the civil works. So one of the great things about Brickworks Park, it's this neighbourhood, this community rolling down into the site. When it's got different lanes through the site, it's got different streets. So we are building it as it will be a neighbourhood. There's over 15,000 trees and plants going into the development. So once this work's been done, it will be amazing space to look at. Our sales office for today, it's just really introducing the project, but you know, we're here at the sales office on Wednesday to Saturday, 10 to 4, and on Sunday 10 to 12. So we have got the ability to come up to site. We're in Yarradale Street, and you can log on to the website. Everyone's got a bit of a brochure. But the thing about the experience of going up there, and Kelly, Chris and Dan are here tonight, and you can have a chat to them about, you know, making an appointment if you're interested. But it's experiencing what's there. You can actually go out the back deck, have a look at what's happening with the construction, and it's just sort of getting that appreciation of the location, the sheer size of the site, but also looking at what's happening with how everything's coming together with the amenity and the landscape and everything like that. We're really excited. I mean, been involved with the project for 7 years, and looking at where the market's going. And we've been, like I said, project marketing for 21 years, and trying to market products with a point of difference is very hard to find. And we're just probably that excited about the project and watching coming out of the ground. I think once you go to and have a look, you appreciate the site itself. So for tonight, we are sort of asking people to register if they wanted to look at the new designs for stage 2. So anyone here tonight, we have got the opportunity to get on the early adopter list for stage 2, or something might suit you in stage 1, but it's having that ability to get into stage 2, which we're very excited about. We look forward to, you know, having more of these information nights. I think the market's moving quickly. People want to be informed. And I think that's the key, is keeping informed and understanding where the market's going, because I think over the next 6 months, things are going to dramatically change. We're seeing, you know, supply levels go down to their lowest, and we're seeing pressure on the market, not just in prices growth, but in construction growth as well. And that's another element that's pushing the market along, is just the inflation of just goods to build a home or build a property is putting pressure on where the market is driving, and we're seeing that every day with working with builders and working with developers. But you know, this pressure that's been put on the market is also is limiting the supply of actually developments that are occurring at the moment. So and building that's happening at the moment is much less, and that's why there's lower supply happening. It's just not due to, you know, land component, but a lot of it's focused on a lot of elements in the economy that's happening, and one of them is construction costs. And so at the moment at Brickworks Park, you know, we've got 1 bedrooms, you know, sub 400, 2s start at 528. So value there at the moment, we really see there's value, but there's pressure on value, not just for the market rising, but the cost of building, and that rising is adding, you know, more pressure on where prices are going. All right, again, thank you so much for coming. Join us for a drink.